selling into the bear rally and getting more short positions while sifting through the market to find some buying opportunities. We're talking with Gary Glover from Novus Capital to find the best trades. Good morning, Gary. How are you?
Yeah, I'm good, Chris.
We've got another update on the markets. The markets have rallied. You saw the mid-August highs. You called that one really well. We're wondering whether we're looking for that mid-October low, whether it's a higher low or a lower low. In this week's report, you've got a few there and then a couple of charts to talk about individual companies. But if we start off with the NASDAQ, what's that mid-October looking like now?
Yeah, look, it's a bit of a, well, I'm not sure it's like a clean outside week there, but it did have a nice, obviously sold off pretty aggressively, which was a pretty aggressive first leg down. And then we bounced, obviously decent last week. Volumes are sort of modest, so not light or heavy, sort of in between, you might sort of say. But yeah, it's funny. When I sort of drilled into previous cycles, they all had a little bit, whether they had an aggressive move down or whether they had a mild move down. There was a few little throwbacks along the way. So the one which we were mirroring the closest had a really sharp 3 or 4 day pullback. So basically sold off aggressively, like wow, and then it bounced, aggressively for 3 or 4 days, and then it sold off again. So quite volatile. So I still sort of think, look, so far the cycle's gone, has solid, has mirrored pretty closely, sold off pretty aggressively. History shows that we have quite a few sharp throwbacks along the way. So this could just be a sharp throwback here. It's funny, sort of when I looked at historically the dates and stuff, and some of them that matched up really closely. I was looking I thought, oh, this could actually have a rally 3 or 4 days up into CPI Tuesday, and then it might resume again. That's sort of when I was looking at sort of the timings there. So I think I was sort of a day early on Xing some of the shorts and stuff there, but yeah, it just looked like it might have a little short move up and then decline here. So look, at this stage, I still sort of favour a deeper move into October. The only question for me is whether it's a new low or a higher low. The fact that it's had a pretty aggressive first leg down, so it's got me still leaning towards a new low, but we'll see here. It's actually had a reasonable sort of throwback here the last 4 days up. But yeah, tonight's big, obviously pretty important for markets there, CPI figure. So we'll see what comes of that. So everyone's expecting it to come off quite a bit. So everyone's optimistic about a lower number here. So we'll see here. So far the cycles have been sort of pretty bang on, and it hasn't done anything sort of differently to previous cycles so far. So if anything, it's almost identical, which I'll show you on a chart further along here.
Yes, you've got a nice roadmap, but before we get to that one, you've got the S&P 500 chart. Similar sort of thing, I imagine. You were talking earlier in the week of adding some B-bus, as you just said, possibly a day too early with the benefit of hindsight. You've got this October high, this area highlighted for the S&P in October. Is that seeming like the S&P is more likely to make a lower low in October?
I still think so, yeah. Look, some people will be looking at that chart, Chris, thinking there's a little inverse head and shoulders there, even though the left shoulder's a little deeper there. But yeah, just so that where the green line is there is sort of that's potentially the shoulder there. But it's not very it's not very symmetrical. So yeah, actually this shoulder here and this shoulder here, and then the low in there. But yeah, I don't sort of it's not a pattern I think's got super high reliability, and that's a pretty messy one as well. So I just don't view it as that. But yeah, look, I think we'll find out here in the next couple of days whether I'm right about my still bearish view here. But all the cycles are still sort of suggesting some weakness here into October there. So yeah, look, I've started to put on a few shorts here. I just really wanted to see a sharp 3 or 4 day rally and try and get a few shorts on into some better positions, which I've got that opportunity there now. So yeah, we'll find out here in the next couple of days whether the view is right or wrong. But so far it's been following the cycle pretty closely. So just got to back the view there.
That's a good one to look at and then extend into the Aussie, because for a long time now, you've been talking about the Australian being a relative outperformer to the American indices because of the composition of our market, the commodities, the dividends, and we're more value rather than the growth markets that the US has been dominant in the last decade. When you're looking at this chart here, is it feeling a bit more like the NASDAQ, where we may sort of come around the low, or it's looking a bit more convincing to come out and edge out a lower low?
Yeah, I mean, to me, this is sort of, I mean, it's had that really strong run up into the, from the 2020 low, big sort of rising sort of wedge up into that sort of top there. And then we've had a bit of a, sideways congestion pattern. And now we're sort of, a deeper break and then a lower high. So it's still pretty bearish. That sort of setup is still pretty negative. So whether, if you look at any of the Wyckoff sort of setups there, Chris, that's sort of pretty bearish sort of, sort of setup here. So just still sort of favors a downside move here. Yeah, I mean, to me, I think it's going to be quite fascinating actually, this, the next sort of, I guess the next couple of months and the next sort of 6-12 months there, just because sort of commodities is really that's a really interesting area here, because if there's sort of if inflation doesn't go away, like a lot of the central banks and a lot of economists are sort of thinking this inflation will just subside straight away here. So I see it, saw the kooks basically talking about coming back to 2 or 3% next year, and some pretty optimistic views there on inflation really just cooling right off here. So look, if that happens, then equity markets can really get going. But if that happens as well, then probably commodities will cool right off. So that could be, could drag our market a little bit lower here. So we might follow the 2002 model, where we found a low in 2003, while the US market found a low in October 2002. So, but if inflation doesn't ease, then you might see commodity prices stay elevated. So, there's two really drastic views there take place here with regard to inflation. So, so it's quite it's quite important for the Aussie market, because we're very resource laden market, very particularly. There's so many commodities in our market, and it's been really, if you look at all the IPOs in the last 12 months, probably 60 to 80% of them are probably of resource companies. So really heavy makeup in that sector there. So just going to be really interesting for us, for our market here in the next 12 months.
Well, it's interesting you say how heavy with we are towards commodities. I do remember reading a report talking about the dividends that just came out of this earnings cycle, and noting that the banks pay in a different dividend cycle, but BHP is making up about half of the dividends being paid after this earnings cycle. So that sort of is telling us just how much of an important role commodities have been playing here in Australia, isn't it?
Yeah, and the weird things too is it's sort of like, if you follow, sort of historically sort of stuff, when the resources companies are trading on really low PEs and really high dividend yields, those are typically top of the cycle type of scenarios as well. So that, just the fact that we do have these sort of low PEs and big yields for the resource companies is, everyone thinks that's fantastic, but historically that's actually not such a good omen. So that's often when they've sort of been looked that way, the cheapest and the best yields is usually in top of cycle. So but look, it'll be fascinating to see what happens here. I think inflation is going to be pretty interesting here. I mean, persisted in the 70s, even it can go through periods where it can cool off a little bit and then can flash back as well. So I think that's going to cause a lot of a lot of volatility here, possibly for the next couple of years as well. So just so look, that's just going to be pretty interesting here, I think. Just looking at that next chart there, Chris, I mean, so far we're just still using the roadmap there for the 60-year cycle. That's been pretty reliable so far. That's still sort of pointing, still suggesting we might get a marginal new low in October. So just still got to respect, even though we had a little bounce here, that little bounce is sort of nothing out of the ordinary. It's actually, if anything, it's actually it's more common than uncommon, I guess you might say. So
The one that we've just had in the last week, is it?
Yeah, that's
okay.
right. Yeah, a little flashback there. So I actually sort of put up a chart there of the Dow Jones in that 2000 to 2002 period, which was sort of like the bear market low there. And pretty interesting chart there because the dates match up really closely with our low here. So 24th of July up into the 22nd of August. So we just had I think it might have been 19th, 20th of July up into the 19th of August high there, and had a bit of a sharp sell-off similar to this, and then a sharp bounce similar to this. So yeah, just I looked through some of the other cycles as well, even the ones that sort of like 60 year, which made a sort of higher low. It had a few bounces in there as well. Probably maybe not as sort of sharp as that one. There was a few bounces there, which were more like sort of the pennant or flag sort of pattern, where they went sort of sideways for 5 to 8 days or something like that, and then they broke down. But yeah, a couple of them, the more bearish ones actually tended to come off aggressively, bounce aggressively, and sell off aggressively. So it's actually done, it's done the more common setup here. So I notice here that this might be the setup here. We've sort of had that sharp sell-off similar to this move, had a sharp bounce, and we might be at that point there. So yeah, I saw some seasonal stuff here around. I think there might have been Larry Williams actually had a seasonal trade there, which is around the 12th of September there, sort of the 12th of December sort of tends to be a bit of a seasonal high for US markets. And we've seen a few sell-offs after the 12th. So he's normally sort of short term, so looking at 2 to 4 day sort of time parameters. But yeah, there was a lot of weakness after sort of early to mid September sort of highs there into the end of September. So yeah, so it's just following a classic pattern so far. So look, there's nothing nothing different here. It's just interesting we're running into the CPI number here tonight. So that is definitely going to be pretty important.
That's a good thing to look back on this roadmap that you've brought up a fair few times over the last few years, and using and overlaying that cycle that you were just talking about. We had the July lows, June, July rally to the mid-August highs, which you'd mapped out and called quite well.
Yeah.
And then highlighting this rally that we're having right now, we've seen it many times before, and quite often it results in, like you're also saying with Larry Williams, September being historically a poor performing month for both the Aussie and US market. So history's favouring us to come back down towards October on many different perspectives, isn't it?
Yeah, that's right. Look, if we get a low CPI number here, the market rallies, and then I'll be wrong here. But so far the cycle's been sort of pretty bang on, and there's nothing here so far which is different from any of these other cycles in the past year. So until we see something different, I still sort of have the view that we're sort of probably going to be weak into early to mid-October here. So yeah, we'll know next week here. But yeah, I think it's still pretty quite a volatile environment here still. So yeah.
Well, that makes it a bit hard to come into finding trades to go long on, but you have done your best to trawl the market and find some favourable looking charts, ones to watch or ones that might be putting up a buy. Fisher and Paykel, that's a pretty severe downtrend. What's catching your eye at this little congestion or movement down here?
Yeah, so apart from sort of halving in price, which is always that can be interesting price level as well, but yeah, did bounce. I had a couple of long-term trend lines which I've been running for sort of many years there, and I saw we bounced off sort of one of those, the first one, but then we had a bit of a bounce up. It didn't really get going, and now we've sort of come back and retested the sort of second line here, and then sort of bounced off that. So a little bit of a reversal week there last week. So I thought that was pretty interesting. The other thing there is that the volumes have been elevated too the last probably 4 to 5 weeks. So potentially after you've seen a really big decline, and you sort of see price sort of starting to stabilize a bit there, and you see volume starting to get elevated, it's often signs of sort of accumulation taking place. So this one potentially could be oversold here. Sort of, obviously the health group, they sort of do the respirator machines, which obviously, in COVID means they were going gangbusters, but then post-COVID, probably was there wasn't as many getting ordered or the need for them again. But then after a while you'll sort of stabilize and go back to normal patterns here. So this might be a little bit overdone here. But yeah, sort of, I just think it's pretty interesting here. I think the price action is pretty encouraging. So yeah, I like the look of that down here.
Now, Megaport, so that's a potential trade there, but you're not buying that right now, are you?
No, I just sort of hold off. I just want to sort of get past this sort of just see how the market trades this week here. I just still sort of got a bit of a bearish view here. I just sort of know that markets can get sold off aggressively. I just sort of feel like we're still at the end of this cycle here, so probably we haven't really entered the scariest part of the cycle here. So just I'll just trade very light here, and then we'll see after the next couple of days.
Nice. And to move to Megaport 1, so MP1, this is one that you've picked up a few times in the Launchpad, and in previous reports you've noted that this chart is really catching your eye. So MP1, you're talking about retracements coming from $22 down towards 6 and 7. So that retracement you've got on the fib retracement on the blue lines. What's happening with MP1 that's catching your eye?
Yeah, so you're right, Chris. A big retracement in price there. Had a nice rally off that low. Pretty impulsive there, and probably most importantly, they actually had an upgrade. So the result was pretty good, and then caused the sort of stock to have that really impulsive week and then kick on a bit further. And since then, we're sort of congested there. Volumes were pretty light, probably a bit lighter on the pullback as well. And then we've got a bit of a reverse. We've got a bit of a bullish move there last week on some higher volume there. So the daily looks pretty interesting there. You could probably draw a little channel on the daily, or a little descending wedge there. It feels like it's sort of broken out of that. Broken a little sort of mini swing high in there as well on the daily. So just looks sort of positive to me. So yeah, probably just the fact that we had an upgrade, positive result reporting season there is probably the that's probably the most important thing there as well. And the price action is sort of supporting that as well. So yeah, it just looks sort of positive to me as well.
Well, keeping with that healthcare theme from Fisher and Paykel, you've picked up Healius. So we look at retracements once again. They're the blue lines. You've got the 0, and then coming back under that 50% retracement of that rally from the lows to the highs. It still looks like it's falling. So, but it seems like it's kind of slowed throughout that May-June period. What are these red arrows? How do you come by those?
Yeah, so it is sort of trending down here. So this is sort of one where I think we spoke a few months ago about. I was expecting some of those healthcare companies to report not so well, just because obviously some of the COVID restrictions there. And then I was hoping that might weaken them off here, bring them a little lower into the range there. Because I think over the next 2 years, when sort of things will normalize again, there'll probably be a somewhat recovery in that space. So that's sort of more of a strategic sort of view. But also sort of notice that oftentimes when you see those, that price bar there where it really ducked down, pretty heavy volume, and sort of came off and then recovered there. Those are sort of just showing that there's some support here for the stock here. So just notice when I see signs like that, I know that there's some support sort of stepping in here. So I think we talked about Iris doing something similar, and then it hung around for a month or two before it got going here. So just think this here, if the market does sort of have another leg down here, like I think it might, I think these stocks will probably just sort of grind out, congest here. I think that'll be a good sign. So anything sort of around that 340 zone there might be looking for, just because I think this healthcare will be a good space to be in here. We've seen sort of a lot of the healthcare and biotechs, we're showing some relative strength at the last low. So I just think that's a sector to be in there. And with all the, there's some uncertainty around some of the other sectors as well. I mean, commodities is going to be the trickiest sector. That's going to be a volatile sector. So that's going to be tricky there. I mean, if you get it right, some big gains can be made there. If you get it wrong, it could be some big losses as well. And even with a high inflationary period, if that does happen, which is positive for commodities, even looking through the historical numbers there, if you go look at the 70s there, those sort of energy, precious metals were pretty strong sectors, but there were some big up years and big down years even within that period. So you're going to get volatile periods there regardless. So just going to be tricky. I think, sometimes there's sort of safer plays in the market here. Just to me, healthcare, and obviously, you think your travel sector will probably recover here as well. So there's definitely sort of some safer plays here in the market there. So I just think any weakness in these healthcare stocks is going to be a safe place to be. This is sort of one area I'll be looking at quite closely.
You're talking about safe places to be, and most people will call gold a safe haven. Newcrest has kind of been a bit of a bugbear this market cycle because it just keeps going lower. We talk about inflation and it drops and doesn't seem to be doing what it normally does. We spoke about it.
That's exactly right. So I think precious metals is the second best sector in the last inflationary period in the 70s. So often is sort of a strong segment in other high inflationary periods in the past year, but for whatever reason, whether it's the US dollar being super strong here, or a little bit of Bitcoin, or just whatever it is, it's sort of so far they've underperformed here. But just notice on the chart here, we had a pretty deep pullback there, broken through the bottom of a bit of a range there. But just got what we call like a little tweezer bottom there, which is a bit of a candlestick sort of formation there. So sometimes when you sort of get an exhaustive move, you can get this thing, get these kind of more wide range sort of lows, like a down week followed by an up week, and both were sort of tails there. So it's just referred to as a bit of a tweezer bottom there. So I thought, okay, it's an interesting sort of little chart pattern there for anyone who studies candlesticks. So you just wouldn't want to see last week's low broken here. So it just looked, with that gap too, there's a little bit of a gap down to that tweezer bottom as well, which is probably makes it more like an exhaustion there, like an island reversal potentially. So so just got to watch it here. It actually looks pretty interesting. I noticed a few of the gold stocks have actually had a bit of a pop this week. So that's kind of positive, but probably need to sort of see them congest back and hold as well. So some positive signs there, but as we know, gold's been a little disappointing so far. Let us down a couple of times already. So probably just want to see some more evidence there. But I think quite a few of them actually are sort of looking positive. So, but probably just wait for a little bit more evidence there. But definitely a sector I'm watching pretty closely.
That's a good point to watch those, because like you said, with the commodities, they can suddenly come into favour when they've been out of favour, and gold is looking out of favour. But with those tweezer bottoms, it's turning the corner.
Yeah, it's funny, sort of gold actually. It's sort of, you often have this perception that gold's a hedge, and you buy gold when everything else goes down. But I've sort of found the opposite there actually, that the gold often sort of charts actually mimic the market. So oftentimes gold stocks find a low similar times to the market, which is probably not that great, because that's not when we really want to invest in them, because then you sort of can invest in everything else. So so that can make it a bit tough. I typically found that gold can often sort of follow equities, so which is not what everyone thinks they do normally.
Well, that's a good insight, and an important insight in a market cycle like this, where we've got markets falling, inflation running high, and many investors' expectations that gold will be the saviour, but it's not quite turning out like that. Yeah. Well, thank you for the insights, the charts, and unpacking them. Gary Glover from Novus Capital.
Thanks, Chris.
If you want to know more about the trading and the cycles when Gary picks up some of the leading companies, the Launchpad and the Momentum leaders, the Friday playlist is to the right, and then also talking about volatility contraction patterns. That pattern is to the right as well.